Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for Thursday, September 28th, 2017. I'm Frank Ochoa, aka Pivot Boss. Here's a look at the daily time frame of the ES. What we have right now is a market that continues to hold within the highs of the recent range here over the last 3 weeks. Really, prices held above 24.85. Basically, at 24.88 is the top of the key range here, and it's basically just held right above that zone. It's had many attempts to really push to new highs and get going, but it's not really done that. And instead, if there's any failure above the zone here, that could lead to a little bit more of a pullback ahead. And again, I continue to mention, even if we do see that pullback, perhaps a fill back toward 24.60, that could still lead to another round of strength ahead. Right now, the market pushed to new highs just yesterday, but again, not able to really take the ball and run with it just yet, pulling back into the range just as it has been over the last 3 weeks. So right now, prices still in an uptrending market, but really stuck in these upper edge of the range right now. And sometimes you have to run the downside stops before you can turn around and open up the upside path. So still watching here to see how this plays out. Overall, still very quiet trading behavior up at these highs, but we're starting to see signs that increased volatility is entering the market. So we could begin to see some decent movement as we head into October. Here's the NQ. The NQ looks very, very similar here in that it pushed to new highs in the previous session here beyond the previous highs. But again, overall downtrending behavior so far. We were looking for signs that there would be a rejection above highs. We started to see those signs in mid-morning. But then again, later in the day, we got a rally here, pushed above those highs and closed. Right now, we're testing the 59.11, 59.12 zone, which is the previous week's low. That's kind of a key pivot right now. You can see that still there's been lower highs here since price failed to push beyond 6,000. Again, that could lead to at least another dip back toward 57.63. If that occurs, again, that could still be a buying opportunity for more strength. Holding 59.12 today would be a sign of near-term strength. And again, right now, this market is kind of coiling here, building out, and at some point, it's got to either start going again, or it's got to run some downside stops so that it can clear a path for more upside price discovery. So right now, again, this isn't the best zone here. I typically have much better idea of what may be happening, and when things are kind of this kind of coiled up, you got to kind of let it shake out and see what we can find. So right now, still letting it develop, but 59.11, 59.12, a very important short-term key level to watch. Let's take a look at gold futures here. In gold futures, we've seen a return to our FOMC key level from September 20th. It rejected 13.17s on the retest and new lows yet again, coming close to that 1277.40, which is our FOMC key level from June 14th. So overall, nice push downward. We've had failed new highs, failed new highs, failed new highs. Then we had a failed low that led to a retest. Since that initial level went offered on the creation, it was offered the second time around and now new lows. So again, there's a clear downward path right now for gold that's happening. Any bounce could still be seen as a short-term selling opportunity as this thing returns back toward value. Value being 1253.60. That's composite VPOC. We could be looking at more weakness toward that target here over the next week of trading. Lastly, let's take a look at crude oil. Crude got an inside day in the previous session. A clear trading range day after the recent rally here. You can see big time squeeze here. This pulled back toward the mid. Inside day here, and now we saw a breakout to the top through the top of the 3-day range and came very, very close to the 52.95 we've been talking about. Actually hit 52.86, which is the 50% expansion of the previous month's range. So that's the R50, as I call it, the monthly R50, 50% beyond this range. So if you take that range right there from the previous month and project 50% of that range up, you're going to get that pivot right there. And so today hit that pivot and it's pulled back. There's a 52.95, very close to getting that target. If price were to close below 3-day highs here, that could be a sign of early rejection that could lead to a bigger pullback here. So right now, getting very close to that 52.95, showing signs of profit taking already. So right now, the key level to watch here is going to be about 52.30. 52.30 is about this zone right here. That could be an opportunity for bulls to try and keep prices above that zone. Otherwise, we could be looking at a rejection that leads to stop run against the other end of support. So that's going to be something to watch out for. But overall, this thing's been trending up. Any pullback could still be a buying opportunity for a shot at pushing price into 53.54. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session. Good luck and trade well.